I'm assuming they have very high rents given the size of their own footprints. Are they paying those rents?
Well, Scott, I can't talk about exactly who's paying and who's not, but I will say this. It's about 65% of the assets that we have today are open, which is very important. And, we expect to have some payment disruptions that are going to happen, which happens when you have an absence of commerce. And we started off before the coronavirus with about a little over $700 million in rents and interest income coming in. So the issue will be how much of that is lost in the near term, because this is a short-term issue as far as we're concerned, as far as our tenants are concerned. And then the question is, how fast do we ramp up on the other side?
Well, without telling me any names, surely you can tell me what you saw on April 1st, for example, in terms of payment of rents.
Well, I can't get specific on that. We are going to have a webcast on Friday, so just a few days from now, where we're going to actually get very specific about the actual rent collections for the month. But I would say that the rent collections are probably as we would have expected them to be. We're encouraged by it. We feel strong about it. We also think that our tenants are very confident in terms of how they're positioning themselves. And they're encouraged to be able to reopen, those of them who've been closed and those of them who are, partly closed.
Yeah, surely some of the bigger names I mentioned may be more capitalized than some of your smaller tenants, obviously. Let me bring Josh Brown in to the conversation. Josh, this is the company you've talked about so often on this show.
Yeah, Chris, it's great to see you. And I appreciate the March update you gave to shareholders. So whenever you own a stock or a REIT, in your case, you're a REIT, with a dividend yield, quoted dividend yield, trailing 12 months of north of 5%, the first thing you ask yourself as a shareholder is this too good to be true? Can they really pay this? So you came into the year with $100 million in cash, sold $150 million worth of store capital shares in January at about 36, which in hindsight looks incredible. And then I think you drew down your credit line, another $600 million. Can you make us feel comfortable about the dividend, the liquidity position?
Yeah, well, from a liquidity position, we're sitting on over $600 million. We had a call recently where we said that we will close out the month of March with roughly $630 million in cash. And just to put that in context, that's about 3 times our combined operating and interest costs from last year. So we're sitting on lots and lots of liquidity. As I said earlier, about 65% of the locations that we have are open. So we have lots of tenants that are performing really well. And, of course, we're diversified across 110 industries, which is really important to be able to do that. From a dividend perspective, there are other things that we've also said. We've made statements that it's really important to pay dividends from operating cash flow and not to borrow money to pay dividends. If you borrow money to pay dividends, you could be whirling cash into oblivion a little bit. So our board is going to be evaluating dividend policy as we get through the end of this quarter and then through the rest of the year. But we expect that, STORE was built on strong dividends. We've had better dividend growth than virtually every one of our peer companies since 2015, partly because we have such strong lease escalators in our properties and partly because we retain so much cash that we can reinvest in the business, and we intend to keep that business model.
Yeah, you have a big yield, 7.5%. I'm wondering, Chris, how you're thinking about the return, getting back to work on the other side of this, and how the businesses who are your tenants are going to manage themselves, what the stores themselves may look like, and how that could impact your own business.
Well, I think that our expectation is it's going to be more of a U-shaped recovery than a V-shaped recovery, and the virus won't go away overnight, I don't think. I mean, that's everything that we see and read. On the other hand, our tenants are really raring to go. I mean, they're excited to reopen their properties. There are, I think, the stay-at-home in 42 states today, something like that. And then virtually every state has early childhood education closed, restaurants are closed, fitness centers are closed. These are tenants of ours that are really excited to be able to reopen. And as they reopen, they may not be using the same kind of square footage in the way they were doing it before. So, restaurants may have fewer tables in them. Fitness clubs may have more classes with less participants. But they are really excited to be able to get back to work. And I think that, I'm excited. For one, I'm excited to go. We've been closed in this office, which I'm calling out of my office. You usually don't come to it. But we've been closed out of this office for 5 weeks, and so our whole employee base has been working out of home. So I'm excited to be able to go out to eat and go to a movie.
What part of the country is your office in?
Scottsdale, Arizona.
Scottsdale, nice part of the country. Bryn Talkington, who's with us today on our investment committee, has a question for you. Bryn?
Yeah, thanks. It'd be great if you could share what type of programs have you guys created to help with the tenants in terms of maybe switching the security deposit for April or amortizing a few months to put it on the back end. It'd be great if you could share some insights of how you're helping tenants get through this, but also keeping the contracts intact.
Sure. Well, imagine this. I mean, we've been working since the middle of March with our tenant base, and then when we do the conference call this coming Friday, we hope to have not only rent deferrals in place for tenants that have asked for them, and we've negotiated with them, but have those documented. So we've actually had to do this and then document all of these items, which has taken just a tremendous amount of effort, which we owe our incredible staff a debt of thanks for. So. So in some cases we've been giving deferrals. I mean, some cases we've been giving notes so that the money is all being paid back. We've not been giving forgiveness, and the tenants have not been asking for forgiveness. And one of the interesting things that will happen too is that most of our tenants are going to that are closed anyway are going to be able to qualify for the CARES Act a little bit, and so we expect that also will start to fold in as the government stimulus comes into place. And we expect that might be able to help us out a little bit in May and June.
Josh Brown, the last one goes to you.
Yeah, I just wanted to just ask you about something that you had said. I think you were asked in a Q&A about buybacks. Store capital at its lows was down more than 50%, and it would strike me that would be something that most corporations would be doing. But in the REIT structure, it makes less sense. However, you and two other executives this year have bought back a bunch of stock. So is that the way you're thinking about proceeding going forward? Would you change your mind about shrinking the share count, or what are your thoughts about that?
Well, what makes REITs is they're required to pay out 95% of their taxable income in the form of dividends. So, right. And that basically means that they don't have a lot of free cash flow to be able to buy stock back. So last year, our free cash flow was $140 million. Our equity cap at the time was $9 billion. Today, our equity cap has gone down to about $4 billion. So we've lost $5 billion and change. If you buy our stock today, by the way, you can buy it for a 25% discount to the actual cost of the equity, which not even the founders could do that. And I don't expect the replacement cost of these assets is going to change anytime soon. And we've been buying assets for 20% discount to replacement cost. So it's very hard for REITs to buy back stock. If I want to show confidence, I'm going to buy stock myself, and our team is going to buy back stock. Our directors will buy back stock, and we've done that, and I've done it at far higher prices than that.